In 1942, 80 years ago, I took $114.75, every penny I'd saved, and I bought 3 shares of City Service Preferred. And City Service was a pretty well-known name now and then. In fact, in 1920, City Service was the 4th largest company in the United States in terms of number of shareholders. I was smart, but I wasn't that smart. I was good at what I ended up doing, but I got a nickel a week allowance, and a nickel a week wasn't enough to satisfy my wants. So I went into business very early, and I wasn't going to make more than a nickel a week unless I started selling Coca-Cola door to door. I sold gum door to door, or sold Saturday Evening Post, Liberty Magazine, Ladies Home Journal, you name it. I didn't want to go to college. I was 16 when I got out of high school. I was making about $150 a month or something like that, delivering papers, which only took a couple hours in the morning. I had this half interest in a pinball machine route with a buddy of mine. I liked to go to the horse races and handicap horses, and I really felt that I didn't really need much more than that. And I was buying stocks. I mean, I read the Wall Street Journal every day, and I did a lot of charting of stocks and that sort of thing then. And I actually was having a pretty good time, and I didn't see that there really was much to be gained by going to college. But my dad kind of jollied me into it. You don't need to be a genius in what I do. That's the good thing about it. I'm a bright guy who's terribly interested in what he does. So I've spent a lifetime doing it, and I've surrounded myself with people that bring out the best in me. And I am in a game that you probably need 120 points of IQ, but 170 doesn't do any better than 120. It may do worse, probably do worse, but you don't really need brains. You need the right orientation. 90% of the people, I'm pulling a figure out of the air, but 90% of the people that buy stocks don't think of them the right way. They hope goes up next week. And they think about the market as something they hope goes up. And if it's down, they feel worse. I feel better. And I hope it goes down when I buy it because I'll buy more. I'm in a game that's very, very, very easy if you have the right lessons in your mind about what you're buying. I'm not buying stocks. I'm buying pieces of overwhelmingly American business. And I'm happy when that's happy, when I'm doing it. I'm happy when stocks are going down. I'm happier when stocks are going down because I can buy more of them with the same amount of money. I'd be happy if I was a farmer. I'd want farmland to go down so I could buy more acreage. I mean, it just makes sense. Let's pretend there is no stock market. Let's say I had to buy these privately, like you buy a farm privately, like you buy an apartment house privately. They're investments. So you're looking to say, what can I do with money I've saved to put it away so I feel good about getting it back later under any circumstances, but not necessarily on a given moment. People would be so much better if they actually didn't have a stock market in terms of buying businesses. You have to make very, very few right decisions in investing in your life. You might say that a person who bought Berkshire Hathaway 50 years ago only had to make one decision. And there's a temptation for people to act far too frequently in stocks simply because they're so liquid. They know they can't buy and sell farms every day or buy and sell apartment houses every day. They can buy and sell stocks, and in a very liquid market with very low transaction costs. And that should be a huge advantage. But people turn it into a disadvantage because they think the availability of the opportunity to trade is something that they have to take advantage of every day. And actually, active trading just costs them a lot of commissions. The main thing to do is buy into a wonderful business and just sit there with it. iPhone that I have, which I'm probably the least capable guy in the world of working with it, but it makes life better. Apple, I think, sells less than 25% of the smartphones in the world. But Apple has produced the one that's the most useful to people. It's an aspirational product. A lot of people have made cars, but you got a few survivors that made the ones that people like the best. And we would be selling 16 or 17 million cars a year in this country if we had 50 producers, or whether we got 3. Well, in the investment world, if you're emotional about investments, you're not going to do well. I mean, facts are facts, and reason is reason, and you can develop all these attachments or angers or whatever about your stock. I mean, you may love the ones that go up and hate the ones that go. That's crazy. I mean, the stock doesn't know you own it. You may have all these feelings about the stock. The stock has no feelings about you. It's going to reflect what the company behind the stock does. So our Charlie Munger's and my investment decisions and our business decisions don't have emotion in them. We have plenty of emotions for other situations. I mean, it's not that we're unemotional about the people we care about or anything of the sort, but business and investment decisions, if you get emotions in the equation, you're going to do a lot of dumb things. Best thing to do if you want to invest for the long term. And it's the S&P 500 index. And what's happened, of course, is that organizations like to grow. So they set up indexes on different industries, different countries. And as soon as you do that, you're violating basically what Jack Bogle said. He says you don't know enough to pick the right businesses, which means you don't know enough to pick the right countries, you know enough. You don't have to be particularly smart. You just have to be patient. And the biggest thing in making money is time. And I've had this long run, and so the compounding at the end turns into very big numbers. But if you would, the start of the 20th century, the Dow Jones average was at 66, and it ended at 11,400. And that was with the Great Depression and world wars and flu epidemics and everything else. So you've got a tailwind in this country if you just own a cross section of it. One big thing is keeping down expenses, and the other thing is not trying to pick one stock, but owning a large group of stocks and buying it over time, and then just sitting and paying no attention to people who say they know when to buy and sell stocks or buy and sell this individual stock. So it's a very simple game where the person who doesn't try to do very much usually does better than the person who spends a lot more energy on it.